What is up, everybody? Solomon here. Super excited to be with you all today. Tons of news. We've got Deloitte essentially coming out with a document stating $4 trillion of tokenized real estate is coming. This is kind of on the heels of Deutsche Bank last week having a bigger document saying that $84 trillion wealth transfer is underway, leading us towards 2035. All of this being said, the biggest news, kind of yesterday that came out over the weekend was ProShares. Leverage short XRP futures ETFs are launching this week. But we have a ton to dive into today. I'm just going to hop in. Hopefully, I still remember how to do these videos. 3 new XRP futures ETFs from issuer ProShares are set for launch on April 30th after the SEC gave its tacit approval. The funds provide leveraged and inverse exposure to XRP, but notably do not hold the asset directly, such as would be the case in a spot ETF. The 3 funds join, I'm not going to even try to pronounce that, 2x long daily XRP ETF, the market's first XRP ETF. So this will be April 30th. The Ultra XRP ETF, which not financial advice, obviously, certainly don't recommend leverage trading, which gives 2x leverage, a short XRP ETF, and an ultra short XRP ETF were proposed in January. But looking like these are going live on the 30th. I want to move into this as well. So for those of you guys that aren't aware, do a ton of kind of deep divey type podcasts, have been getting a lot of opportunities to do really big enterprise podcasts out of Genfinity, which is my company. If you want to go to @Genfinity.io and give us a follow, and I'll show the website a little bit later as well. But tomorrow, interviewing Deloitte about global enterprise blockchain adoption. This is Kim Schneider, enterprise blockchain lead at Deloitte. And shout out to the Hashgraph Association for helping to put these together. So this should be really fascinating for those of you guys that aren't aware of just how big Deloitte is. They're a monstrous firm, 460,000 plus employees worldwide, 150 countries and territories, and Deloitte in the US alone, 171,000. But their ESI platform does leverage Hedera. So this is the Deloitte's environmental and social impact platform. So certainly dealing in ESG initiatives, but you can see in here, they definitely directly leverage Hedera. So Deloitte leverages the Hedera Hashgraph network. Hedera Guardian stands as a modular open source measurement, reporting and verification, or MRV solution that harnesses the potential of Hedera. By enabling transparent, auditable, and traceable transactions, we offer an unparalleled level of assurance and impact measurement. One thing of note within this, and I recommend if you're interested in, some of the other enterprise type interviews that we've done. I just interviewed PwC or PricewaterhouseCoopers blockchain or Europe blockchain lead, talking about product passports in the context of Hedera as well. Product passport, sustainability, and AI, kind of the 3 biggest talking points there. I think we're publishing an article on that PricewaterhouseCoopers interview. PwC, one of the big 4 as well, one of the largest professional services firms in the entire world. But this should be a really cool interview with Deloitte. This is going to be tomorrow. If you guys are interested in checking it out, give Genfinity @Genfinity.io on X a follow and check that out. All right. Found this document. This was at the beginning of last week. This is Deutsche Bank reporting an $84 trillion wealth transfer from boomers to millennials and Gen X is currently underway. And this whole document's about tokenization. So this is a $84 trillion wealth transfer under the purview of digital assets, tokenization, distributed ledger, all that, with mass tokenization just 2 to 3 years out. Interestingly enough, you can read the comments section, which I try to stay away from at this point, but I have like some comments under there that's like, just another fake document invented by whoever. And it's like, no, I mean, some people can actually find documents. So this is this document. If you guys are interested, it's out of Baker McKenzie. I'm sure you can find it if you do some searching. But tokenization of financial markets, mapping the plausible future through scenario analysis. I'm not going to read all 27 pages, but $84 trillion wealth transfer is certainly something not to scoff at. There's an interesting chart in here as well, which does mention a lot of kind of the digital assets that we've been talking about forever. XRP's on here. Hedera's on here, Arbitrum and Avalanche are on here. I think Polkadot's on here, Polygon. But this is really kind of just giving you the overview of the innovation phase, the emergence phase, the post proof of concept maturity phase, where we're at today. and mass commercialization of tokenization. This is directly coming out of Deutsche Bank. So, and this 84 trillion figure is in here as well, if I can find it. The great wealth transfer, demand driver for digital assets, a generational and geopolitical shift. It's so crazy, like reading these documents now compared to whenever we used to deep dive them like 5 or 6 years ago. And it was like, yeah, distributed ledger is interesting, but it's dangerous. And then the narrative and the rhetorics just continue to shift and shift. But the great wealth transfer, millennials and Gen Z driving demand, a massive USD 84 trillion wealth transfer from baby boomers to millennials and Gen X by 2045 is underway. Unlike previous generations, the following now applies. Millennials are 5 times more likely than baby boomers to own crypto and digital assets. The next generation, which is super fascinating. I mean, anybody that has kids now, like I think it's interesting. So like, you know, when you're in that like late 30s, early 40s age range, you know, we still kind of had that really organic go outside, play outside, and come in when it's dark outside type like childhood. But in like early teenage years, you know, that age group kind of had the inception of like AOL Instant Messenger, and we were on Napster, and we were, you know, the Facebook kind of generation. But when I look at like my kids, even like they are totally digitally native, which kind of scares me to an extent. But it's talking about this in here. The next generation is digitally native with a strong affinity for blockchain-based financial products, creating a conductive environment for a shift from traditional asset classes to non-traditional asset classes, including crypto and digital assets. Emerging markets with young populations are already adopting crypto at scale. India has 90 million crypto users. Vietnam has 20 million, creating a huge base for tokenized asset adoption. So yeah, $84 trillion wealth transfer underway. You saw that chart in here as well, which is a pretty fascinating chart. I thought I'll try to blow it up a little bit here for you guys. It's just, I mean, there's way too much real world adoption to even stick on a chart here. But estimated 2 to 3 years, next wave of development and future opportunities down in the bottom right here. Emerging demands from leading asset managers to outsource digital asset servicing, entry of boutique AMs, and more tokenized / digital fund issuance available to retail, more innovative structures. So from today to mass commercialization, Deutsche Bank is estimating 2 to 3 years, which is pretty crazy. I mean, even if you put it under the context of like how we just interact as society right now, I'm really interested. Like we talk about RWAs and real world assets and tokenization. There's some interesting kind of reference points I'll share with you guys here. But you know, I don't hear I hear like the low hanging fruit. So like traditional financial products and treasuries and all that stuff as far as token is, and real estate, which you'll see here in a second too. But like I don't often hear about like our data, and that's certainly like in this attention economy that we all live in right now, where everything is trying to grab at our attention in every which way, shape, or form that it can. Um, and you know, I think that in crypto, like we're going to start custodying our own data, just like we're supposed to be custodying our own digital assets. And if we're custodying and managing our own data, then you know our data, I believe, is 100% just in general for how we interact with different platforms is going to be monetized. It just makes sense. And that's, I don't even know how you put that on a chart. Like I'm sure the Facebooks and X's and Twitters or whatever of the world understand the value of each individual and what they're worth and where what their attention's worth. Because if you're using a platform and it's free, there's a reason it's free because we're the products on the platform. I really am interested, and hopefully we get to that point where kind of the power is placed back in our hands and we really get to kind of basically get paid to browse the internet in ways that we want to browse the internet. Again, I mentioned real estate though. This is Deloitte. This just came out this morning, predicting 4 trillion in tokenized real estate by 2035. So kind of that time, that same exact year that Deutsche Bank is saying $84 trillion wealth transfer, Deloitte predicting 4 trillion in tokenized real estate, obviously interviewing Deloitte tomorrow. Maybe I'll ask them about this number. But yeah, I mean, this is fascinating. If you guys aren't aware, I mean, like the numbers fluctuate, but you know, for global real estate and what that industry is worth, I've seen figures as low as 300 trillion. I've seen figures up to 400 trillion for global real estate. And we've done some articles on that, which I'll share with you here in a second. But that's really crazy that one industry alone, here's what I'll put into context. So 4 trillion in tokenized real estate is what Deloitte's saying. If we look at like kind of where we're at right now, and I've shared this site a couple of times, and it's probably not, I know it's not totally up to date because like Hedera is not on here. There's some different networks that aren't on here, but this is just for totally like context. RWA.xyz gives you kind of a little bit of an overview of what real world assets tokenized on chain right now are and the value of those. So excluding stable coins, right now, $21.61 billion. Obviously a much lower statistic than 4 trillion in tokenized real estate, or 84 trillion by 2035, which Deutsche Bank is stating. And I just find it super interesting. Like, look at the chart of Bitcoin, where the price action was in 2009. Obviously nothing compared to where it's at right now, like $95,000. This is something that I think will be really fascinating to watch over time. Because if you go back to like July of 2021, 692 million. July of 2022, 3 billion. July of 2023, 6 billion. 2024, 11 billion. Now we're at 21 billion. This is like an exponential growth for real world asset tokenization. Obviously 100 billion is going to be excluding stable coins will be a huge milestone. And then obviously getting up to a trillion. I would actually argue that we're probably closer to 50, 60, 70 billion right now. If you were to actually, and maybe even a little bit higher than that, if they were to actually have all the networks on here. But yeah, I just think that these numbers are super fascinating, and like watching where we're going is going to be crazy. So I wanted to give the Tokeny group a shout out. I saw an announcement today that they partnered with HBAR Foundation to accelerate institutional tokenization adoption on Hedera. But we also just had the opportunity to interview Tokeny, which I'll share with you here in a second. But Tokeny, you know, we talk about tokenization of real world assets. You know, you look at all these institutions and enterprises and like the way that they're going about digitization and leveraging distributed ledger and blockchain. And, you know, I think that a lot of this stuff, the majority of adoption is going to happen at like the infrastructure level, where it's like you need to have standards in place so that multiple institutions can tokenize assets, and they're not all these like walled gardens of tokenization. Because these enterprise and institutions aren't just tokenizing things for the hell of, for the sake of it. You know, there's a reason behind it. It's like, what do you do with something once it's tokenized? Does it become more liquid? And if it becomes more liquid, why does it become more liquid? Because you can maybe pathfind liquidity across different networks in the future, just like we talked about with banking and payments for the XRP use case back in the day. So Tokeny is the ERC 3643 standard, offering financial institutions the ability to issue, manage, and distribute tokenized assets in a fully compliant and interoperable way. So we just recently did an interview with Tokeny as well. XTC Network or XTC Foundation, XTC Network, plug and play, have an RWA accelerator program right now, which is really interesting. That I just did a full interview with these guys on April 1st, and we had Tokeny on here. So if you guys want to watch this one, you certainly can as well. It's on Genfinity.io. But leaders from XTC Foundation, Plume Network, which is an L1, like RWAFI, Tokeny Solutions dive into the future of real world assets on XTC, driving the next wave of real world asset adoption. So it's cool to see, like, you know, for me, even when I see like these different layers of connections across these different networks, like doing an interview with, you know, for an accelerator on XDC, but then seeing Tokeny working right alongside Hedera as well. And I think another example of that would be Archax, which probably rings a bell for RWA tokenization for all of the XRP community, and Algorand and XTC and Hedera and all these kind of networks. I find it fascinating to kind of watch the crossover here. But so this is the real estate document that came out of Deloitte, though, that I think is also kind of interesting to look at here. Digital dividends, how tokenized real estate could revolutionize asset management. And now tokenized real estate, like, this isn't new in crypto. Like, I remember seeing stuff like this in, you know, 2017, 2018. But they're estimating, Deloitte Center for Financial Services predicting that 4 trillion of real estate will be tokenized by 2035, which is an increase from less than 0.3 trillion or 300 billion in 2024, with an annual growth rate of 27%, which is pretty crazy. We did an article on, you know, again, if you guys want to check out all the stuff that we write on Genfinity and some of the interviews that we've done, feel free to go to genfinity.io and check that out as well. But we did an article back in October of last year, tokenizing the $370 trillion real estate industry. This was with an interview with Proppy, which I'm sure a lot of you guys have heard of. Proppy's been around forever in crypto. And Magma is kind of doing like the digital, this is all the way back in October, so I'm trying to remember. Magma is dealing with like the digital twin aspects for like building materials and all of that. And then we also included in Red Swan out of Hedera and Lofty out of Algorand, because I know that Lofty wasn't mentioned in this Deloitte portion here. But yeah, and we did the full interview here. Another kind of interesting point is I just interviewed, I haven't done a video in so long. Sorry, I'm trying to catch up here, but I interviewed BIA Group. BIA Group is the largest waste management, smart waste management, sustainable waste management organization in the entire Middle East. And they're looking to leverage Hedera and Internet Computer. And I was like doing research into BIA, and check out BIA Group, Google search BIA and just Google BIA office building. They have like the craziest smart building that you'll probably ever see. But I was doing an interview with them and doing research for BIA Group, and they actually have ties to this Magma organization as well. And it's like digital asset native Magma. So not financial advice. I'm not paid to say that or anything. But I find it interesting to always see those connections with like just totally random different interviews that I'm doing. And there's always like this weird crossover. So it's pretty crazy. But and then kind of on the back end, we've done full articles on Lofty as well. Redefining real estate markets with tokenized solutions. Lofty on Algorand is actually doing things, I think, in a really smart way, where they're just abstracting away all of the verbiage of blockchain and just saying fractional real estate ownership. Makes it way easier for people to kind of onboard and all that stuff. But you can go to genfinity.io and check out all of the articles that we're writing here. And then if you guys want to check out that full XTC Foundation Tokeny RWA Accelerator, check it out here. I'm starting to get these interviews up that we've done. We've done so many. I probably do, I don't know, 10 or 15 interviews or podcasts a month, which is a big reason I haven't been able to do as many videos. But this is this BIA interview. Smart cities on Hedera, sustainable waste management, all of that. For those of you guys that aren't aware, Chainlink, who's obviously a governing council member of Hedera, directly integrating the Chainlink standard into Hedera as well. So there's a podcast up here on that. This Internet Computer Global Adoption one that I did was with Emilio, Director of Global Adoption at Genfinity. And he actually dropped some alpha about a working group that's currently ongoing between the Hashgraph Association and Genfinity to bring Genfinity's chain fusion for interoperability onto Hedera. Also, agentic AI directly on Hedera using so Hedera apps like natively running AI, leveraging Genfinity tech, which I think is pretty cool as well. I did this interview with Boston Consulting Group like a month ago. And this was a really, really fascinating interview if you want to figure out where real world adoption is actually kind of happening right now. Very non-sexy use cases, but really interesting as far as what these enterprises and institutions actually need, because Boston Consulting Group is a monster as far as kind of being that in that middle ground of integration between Web3 or blockchain native and traditional enterprise infrastructure. And I didn't even know about this use case, but Urs was talking about a trial that they did in Europe for wholesale settlement of wireless roaming fees, leveraging Hedera. Just did an interview with Algorand as well for their masterclass and their accelerator. So I'm trying to get all these interviews up for you guys, but there's some really, really good content on Genfinity's YouTube page if you want to give us a follow at Genfinity Media. So the Deloitte space is tomorrow. I saw Artifact. For those of you guys that aren't aware, like the NFT craze in 2017, 2018. No, that was maybe 2020 or 2021 with Artifact. I'm like dating myself, but 2020 or 2021 Artifact. I actually had some of these Artifact NFTs, or tried to, not the OG ones because they were like way too much, but Nike facing a lawsuit from people who bought the NFTs, sued for $5 million over shutdown of NFT platform Artifact. This was interesting. It was like an interesting time because NFTs were such like a hypey thing. There's still a ton of NFT creators, and I think it's certainly something that's good for like, I don't think we've seen the ultimate, kind of flush out of what NFTs look like at all. I'll put it that way first and foremost. But like, I look at like NFTs right now as like being a really interesting way for projects, artists to like empower themselves and build communities, similar to, as much as people hate meme coins, like meme communities are the same way. It's like a community building thing. And, you know, just kind of interesting to watch how this stuff flushes out and how we kind of keep seeing these like cyclical things with like what's trendy, what's hypey. And really it's just about community building. But Nike facing a lawsuit right now because they pulled the plug on Artifact. And then it's kind of interesting to watch where we're at. I mean, you know, looking at Bitcoin right around $94,600. I've had this up forever, all the way back probably in like 2019, 2020. You know, I know a lot of people don't believe in the 4-year cycle type stuff. I still do until it doesn't happen. And I did kind of just like I'm not saying that this is a correct study, but it was a study that I did all the way back in 2019, 2020, where I like took the EMAs, I did a percent drawdown. I looked at how long before the halvening were the bottoms usually. I looked at how long after the halvenings the tops were usually. I looked at, you know, the fibs and all that other stuff, and actually nailed the bottoms pretty well. But, you know, I always kind of had these two, you know, September through like October timeframes for 2025 as being a potential, and it'll be interesting to watch where we go in this cycle. Total crypto market cap, for those that aren't just holding Bitcoin, really just got to break above the $3 trillion mark. You can do the same study for altcoins and just pull altcoins. Look at, you know, the big time frames for resistance. I don't recommend doing this on the daily. You know, go to the monthly. So here's a monthly candle. We broke down below, obviously. We got to get back above 3 trillion for the most part. We only had like 2 monthly candles above it. We got to get back above 3 trillion. But yeah, I mean, tokenization of real world assets, watching how this stuff all shakes out is going to be really fascinating. It's literally like less than a drop in the bucket of real world assets on chain right now, 21.6 billion. And you have Deutsche Bank saying 84 trillion by, you know, 2035. You have Deloitte saying 4 trillion in real estate by 2035. You have estimates that, you know, go from anywhere from 6 to 10 trillion by the end of this decade. And yeah, it'll be really interesting to watch kind of how it shakes out. You know, one thing that I would hope happens is like the networks that have been around, these dino networks that people always like to kind of talk negatively about, are the ones that have built up the infrastructure. They are the ones that have built the corresponding relationships. They are the ones that have focused on compliance and developing relationships to make sure that they're doing things correctly. And I hope that at some point we do see that kind of shift. We'll always have hype trends in crypto. It's just going to happen. It's the nature of the beast, especially given what we've seen recently with kind of, which I think is a good thing, which is just letting kind of whatever happen as far as the regulations are concerned, because there's been a huge stepping away from the SEC given the new political regime and everything else. But I do hope even outside of that hype that we start seeing like more and more foundations built of real world adoption. And I hope that the networks that have done all the work to make sure they're doing things correctly kind of get a little bit of the shining of the light from that type of stuff. So I hope you guys enjoyed this. Please, if you like this video, like and sub to this channel. Also check out Genfinity for longer form podcasts. We're interviewing tons of people, Algorand, Boston Consulting Group, a lot of Hedera stuff, Internet Computer, XTC, Constellation, and DAG. So lots of stuff in here, guys. And go and check out all the written content that we have as well, because there is a ton of it. So hope you guys enjoyed this video, and I'll talk to you guys when I talk to you. Thanks. Bye.